Tata Motors demerger. Here is a quick analysis. Demerger means separation of businesses, and the board of Tata Motors has decided to separate its commercial vehicle and passenger vehicle businesses. So the commercial vehicle business will comprise of trucks, buses, and the small commercial vehicles, and the passenger vehicle business will comprise of domestic car business and the Jaguar and Land Rover. So let us discuss three things very quickly. Why this demerger, how valuations stack up, and should you jump in. So first, why this demerger? This may be because Tata Motors management now believes that the passenger vehicle business can stand on its own feet. The company has also raised close to $1 billion in its electric vehicle business a year back to fund its growth plans. And if you recall the journey of passenger vehicle journey of Tata Motors, it happened 3 decades ago with memorable brands such as Tata Estate, Sierra, Safari, Sumo, and the Indica. But then it quickly lost out to foreign competition and it became a loss-making business. But what happened in the last 5 years was a dramatic turnaround where Tata Motors significantly improved in terms of design, quality, performance, and more importantly, safety of its products. And it has actually bridged the gap with number 2 player Hyundai in the domestic car market. And this business is now a profitable business. So Tata Motors also redefined, or it flipped buyer sentiment in terms of the trade-off between mileage and safety. So it is no more kitna deda hai, it is kitna safe, and kudos to Tata Motors for that. Now the second thing is about how valuations stack up. So the CV business or the commercial vehicle business will just resemble that of somewhat like that of Ashok Leyland, or in a sense Tata Motors is actually going back to its old avatar, which was telco. So the commercial vehicle business will be valued in similar lines of that of Ashok Leyland with some adjustment for debt and EBITDA margins. So if we take a ballpark assumption, then out of the current stock price of 1000, then 30% or 300 will be for commercial vehicle business, and remaining 700 or 70% will be for passenger vehicle business. Now this part is a very tricky part, the passenger vehicle, because bulk of its revenues, or 75 to 80% of its revenue, is contributed by its overseas subsidiary Jaguar Land Rover. So now let us translate or convert this 70% or 700 rupees per share into dollar terms, and it comes to around 30 to 35 billion dollars in valuation for this business. Now let us see how it compares with other players globally. So here is the table, and you can see that barring Toyota and Tesla, the valuations are not that great for other players considering their size and scale of operations. And this is the sad part about this industry. Because very few players make money in the long run after pumping in significant amount of money in research and product development. So this is how the industry is globally. And if you look at the table, you can also see that the domestic business of Maruti is actually valued much higher than its parent Suzuki Motor Corp. And so this is how it is, but the only positive side is that at this point of time, the favorable is sentiment is favorable for this business, and Hyundai in the IPO is also coming. So that may also add to positive sentiment, but otherwise it is a very difficult to value business globally. Now let us come to third part, which is should you jump in? There are three important things to keep in mind here. One, the stock, Tata Motors stock has already doubled in last 1 year, and so it is no more trading at a cheap valuation or mouth-watering valuation. Second, this entire process of demerger may take a year or so until you get the shares of these two separate entities credited and all. So it is a long-term process. And third important thing is after the demerger, both these businesses will be volatile. One is commercial vehicle business that is already cyclical, and the other is a very difficult to value passenger vehicle business. So both these businesses will be very volatile. So it is only for those kind of investors who can time the entry and exit meaningfully well in a cyclical stock, or those who can ride all these ups and downs.